Let's start at the beginning. I want to hear the story of your career and how you ended up where you are today.
Yeah, I suppose it started nearly 10 years ago. I originally started my career in aggregation. So I was working as a BDM, working with mortgage brokers, helping them build and grow essentially their businesses. And it was at a time where I think technology was starting to play a big part in broking businesses, where a lot of brokers hadn't really started using CRM, hadn't really started using technology, and I was essentially going in and helping them build and grow their brands. After sort of 4 or 5 years, I sort of got railroaded into partnerships and building out businesses for the company I was working for, and one of those being an asset finance division for the aggregation arm, essentially for the broker network to be able to prefer their asset and equipment finance business into, and one of those being Jayco Financial Services. So we became the fastest growing asset finance business in the country, and financing probably more caravans than any other broker in Australia. And after sort of 4 years of travelling around Australia and working with businesses, building and growing their asset finance arms, I sort of took a step aside and reached out to Fabio, and here we are.
Brilliant.
Simplify Asset Finance.
Love it. Mate, and I'm always so compelled by that jump, right? So 10 years corporate, PAYG, secure, earning good income. What made you take the leap, right? Because all I'm seeing is risk, harder work, probably a hard grind for the first few years.
100%. I think, it was something that I've been planning for a few years, and it was, always in the back of my mind of being able to do something for myself, right? And I think that element of risk and uncertainty and walking away from comfort, and that uneasiness was scary, right? I was pretty fortunate that my wife was a big supporter and saw in me what I could do. But it just got to a point where I was like, you know what, I'm helping all these businesses build and grow. Surely I should back myself and take that leap of faith, right? And it was at a time where I was, 2 months out from my wedding. Financially the market probably wasn't as strong as what it had been, sort of immediately after COVID and, a few years after COVID.
Yep.
And I thought, you know what, if I can make it work in this climate with all this pressure and get through the next couple of years, then, I should have and will be able to create a really successful business. So, yeah, with the weight of the world on my shoulders, I took that leap of faith and I've never looked back.
I love that, because what I heard there is, I think a lot of people, they try to wait for the perfect time. And I think you went in with eyes wide open saying, you know what, there's never going to be a perfect time.
No, there isn't.
Let's just get it done. Let's go for it. And
Yeah.
now you're here 12, 18 months in?
12, 18 months in.
Yeah.
We've been nominated for a few awards, which was really nice. We've hit our budget and our targets of where we wanted to be, and it's a really exciting time for us. I think that, we're doing things different to most broking businesses when it comes to asset finance and using technology, but also retaining our boutiqueness of what we're trying to offer. I think what we find in our market is that, there's smaller asset finance businesses that are sort of one-man bands, and then you've got these conglomerates, and there's sort of nothing in between that offers like a boutique service that's technology-driven, that's doing good volume.
Yeah, I love that. I like the Goldilocks effect. It's not too hot, not too cold, just right.
That's it.
Yeah.
That's it.
You touched upon it actually, your partner. So for those of you that don't know, successful, she's got her own fashion label, doing incredibly well. I'm always curious over the dinner table conversations, both business owners. What is that like? Is it just an absolute kerfuffle when you guys get home? Are you always talking business?
It's actually interesting. Like, I think that I've taken a huge interest in her business. It's interesting. Like, I've taken her passion on as mine, and I get a little bit involved in her business, and from a process and structure point of view, that's sort of what I'm good at. But yeah, we do talk a fair bit of business, unfortunately, and it's sort of hard to escape that because we're both business owners, we're both hardworking, we're both driven. But I think, we try and make like our Sundays our day, where that's just for us, where we don't talk shop and we actually enjoy, being a couple, because it is hard. It is hard. And it also is exciting too, right?
it's a 24/7 thing, right? Being a business owner, it's sort of it's a lifestyle.
100%.
Yeah, you can't separate yourself from it really. Now going back to the asset finance, and I think when people hear the term mortgage broker, I think a lot of people immediately will understand what that means. So if I want to buy a house, I need to get a home loan, or if I want to refinance my home loan, I use a mortgage broker. Tell me the difference between a mortgage broker and an asset finance broker.
Yeah, look, they are very similar, right? We are essentially utilising an asset as security as much like a mortgage broker would in a home. But rather than a home, we're using a car, a boat, a caravan, a truck, or a piece of equipment as security, allowing us to get a better rate from the bank and essentially funding it as a very similar way in which we do a mortgage, just probably a little bit easier, right? So we're only needing a couple of pay slips and a driver's license to get it through, rather than months of bank statements and a blood sample and a
These
pretty
days.
intrinsic assessment of your overall profile, right? But asset finance is very similar to mortgage broking, but it is also very specialised. You'll find that most mortgage brokers probably don't touch asset finance. They draw a line in the sand and go, you know what, I just want to touch residential, commercial, maybe a little bit of SMSF, and I'll have a broker or somebody else that I work with that sort of specialises in my asset and equipment finance.
Yeah.
And one of the key parts of that is that asset and equipment finance is extremely fast paced. You've got a client inquiring on one day and 3 days later they're expecting to drive away with their asset. And for a home loan broker, it's a little bit hard to put down their complex mortgages and stop and focus on that extremely fast transactions. So for us, I suppose we're very process and procedure driven to ensure that we have the ability to handle volume and work with clients and get their applications approvals through as quick as we can.
Yeah, and speaking of pace, which I've seen firsthand, I mean, what's the sort of turnaround time or the fastest turnaround time you've seen from go to woe?
It can be an hour. It can be
Wow.
literally as, start to finish. We've had inquiries come through, especially in the personal loan space, which is very AI and technology driven, where we can essentially take an application, submit it, have it approved and settled within an hour. But typically speaking, in our previous life, one thing that we did test was obviously lead times for inquiries coming in and our SLAs for getting in contact with our client. Initially, we started off at 2 hours. Within 2 hours of an inquiry coming in, we'd get in contact with the client, take the application, and collect the documentation, submit it, approve it. We actually shifted that to 5 minutes, and our pickup rates, our conversion to application submission and approval went up 30%. So essentially, for us, when we started building our business, that was the one thing that we wanted to keep on hand, was that we wanted a really fast-paced business where, we essentially strike while the iron's hot, while the client's engaged and, they've clicked inquire and the conversations is front of mind, where we essentially, work with them and help them with any questions they have while they're in the dealership or, while they're free in front of their computer and have the ability to take a phone call.
Yeah, totally. Now, one thing that I've seen work incredibly well is the finance that you can provide for business owners. So whether it be a really common one is obviously a motor vehicle within their company or business, other type of machinery or equipment. Can you sort of expand or tell us a little bit more about how you can sort of add that value to those business owners specifically as they grow their business?
Yeah, the commercial space is really unique and different compared to, say, consumer lending. In the commercial space, especially in asset finance, a good portion of what we do is low doc. And I suppose the benefit of that in comparison to, say, mortgages, where we go down a low doc path, we get a higher rate because we're providing less documentation, right? In the asset finance space, it's actually a level playing field. A full doc application, a low doc application, in most scenarios, it's going to be the same rate, same repayment. So for business owners that, typically have been operating their business for a couple of years and own their own property, we can essentially fund their assets up to 300 grand without any financials. As long as they're ticking the right boxes in the background, good credit, good repayment conduct, and essentially trading and running a successful business, we don't really need to provide any income documentation to verify it. So for those businesses that, might be a little bit behind with getting their financials prepared, it's a really easy way into getting into their new assets.
Yeah. Simple, quick, easy.
Yeah,
That's
correct.
definitely what I'm hearing. I think another one that I've seen firsthand that you delivered is as business owners grow, they inevitably come to this sort of fork in the road where they kind of have to make a decision sometimes where they've done really well, they've got some cash in the bank, and they're saying, okay, cool, need to invest in this piece of equipment. And where I've seen you come in, you've gone, listen, that cash in the bank, you can keep that aside. You can use that for working capital or whatever it might be. Then you said, why don't we finance that piece of equipment? So you're not putting this big outlay out there. You're not draining your bank account. You're then giving them a sort of fixed repayment over a long period of time. So they're able to manage their cash flow as well. And then as a side benefit, they are getting tax benefits as a result of doing that as well when it's structured correctly. And for me, it was just this big light bulb moment where I thought, with the right strategy, you're able to grow your business in a really sustainable, really safe and secure way. It's real key learning with those business owners and how they can continue to expand their businesses through the right asset finance.
Yeah, 100%. I think you hit the nail on the head there. I think the key with any business at the moment is cash flow, right? And once you've put your cash into an asset, it's not like a mortgage where you have the ability to redraw it, right? So essentially when we're working with our clients, the one thing that we're looking at is what's cash flow look like, what's your budget, and what can you afford? Let's not take it over too short of a term where you're wanting to pay the least amount of interest you can, but we're going to stranglehold cash flow. Yeah. Let's find the right repayment term and the right structure, whether it's a longer term or a shorter term with a balloon, to ensure that we're not strangleholding cash flow, but we're also making the most of, like you said, of the tax benefits, the depreciation, the maintenance, and the interest that your account's going to be able to claim for you. Because cash in the bank's essentially going to help you through the slower times, whether it's the Christmas periods where trade does slow a little bit, or purchasing or funding those everyday essentials. It's a lot easier to finance a car, a truck, or a piece of equipment than, say, a fit out. Mm-hmm. So leverage your cash for the assets and the elements that help you run every day.
Yeah, for sure. I was actually sort of thinking, so started a business, going really well, starting to sort of get some good contracts and clients. How long do I need to wait before I can get my sort of first sort of piece of equipment, asset or finance, get that going?
I think it's a really good question. It's how long is a piece of string, right? So depending on the client's industry, what they do for work, whether a skilled professional or a skilled trade, in many cases, it can actually just be one day.
Yeah.
In some cases, we may need to wait up to 3 months just to show the lender that there is cash flow, there is profitability within the business, and there is a little bit of stability. For some of those larger lends, we may need to wait 12 or 24 months. Okay. But it really just depends on the client's overall profile, their industry, and in the background, key things are credit report and, previous lending history as well. Okay.
So from the sounds of it, it sounds like best to approach it in a way that it's worth the conversation. Don't think, hey, just because I've started, I've got to wait 2 years. It's worth just asking the question.
Yeah, 100%. I think most people are so used to that home loan conversation around, you've got to be in business for 2 years. Yeah. You've got to have 2 years worth of financials. Asset finance is really different. It is a lot more flexible, and, there is a lot more, we're much more a solution-based lending platform.
Yeah. So you touched upon it there. Your part of the assessment that occurs is your credit history. So let's say I've been a little bit naughty in the past. So I had a good time in my 20s, and I might have had something like a default on there, for example. Can you still find lending solutions in those cases?
Yeah, definitely. I think, we've got access to 30 odd lenders in the asset finance space. And what you've got to appreciate that every lender has its own unique policy and its own lending criteria, and their own place in the market. So there are lenders out there that will work with you if you've got poor payment conduct or poor credit history or defaults from the past. They're happy to work with you on finding a solution for the short term. And in those circumstances, we're going to have a slightly higher interest rate. But essentially the strategy there will be, let's place you here for 12, 24 months. Let's work our way through that poor conduct. Let's create good credit history and then refinance you and move you into the next product.
Okay, great. I love that strategy. And then sort of just touching upon that as well, with the credit history, a key term that at least I know that we hear a lot in home loans is comprehensive credit reporting, or CCR. That sounds like something that's really important for you to do upfront in the asset finance space.
Yeah, definitely. Like comprehensive credit reporting is a new thing that's come out in the last sort of five or so years. And essentially what it allows lenders to see is on your credit report, your current payment conduct on your debts, whether it's a credit card, a personal loan, car loan, or your mortgage. So at any point in time you're late in making a payment, it'll actually appear on your credit report and it will have an adjustment, and it'll also put a mark on your credit file. So one of the key things that we do every single time we've taken an application is we always run a soft credit check. The value in it for us is that it just gives us that sneak peek in regard to your client, your overall profile, and ensure that there's nothing, or ensuring that everything's kosher there, right? Because a lot of the time people don't realize that they may have had a credit card, and just because you've not used the credit card and you've paid it off, that annual fee might pop up.
Yeah.
All of a sudden you start missing those repayments and it appears on your credit file. So for us, we ensure that your credit file's good before we actually start submitting applications.
And you said the term soft credit check. Can you sort of expand on that a little bit more?
Yeah, so anytime you put an inquiry with any bank, whether it's applying for a car loan or a personal loan or whatever it might be, it's going to leave a mark on your credit file. As a broker, we've got access to tools where we have the ability to run a soft credit check, which essentially allows us to look at the same credit check that the banks would, but it doesn't actually leave a mark on your credit file. So it just allows us to, I suppose, have a bit more of an improved assessment, ensure that if we're going to place you with a lender, they're going to be happy with what they see on that credit report.
Yeah, so going in there with eyes wide open. Really.
Yeah, 100%. And I think that, more so than ever, a bank's referencing credit score and credit reports. And, we start seeing like filtering questions and inquiries from our clients around the cautiousness of, hey, you're not going to submit anything on my credit file.
Yep.
They're mindful of what their credit score is. So it is definitely a topic and something that clients are being more and more wary of.
Yeah. Do you have any tips for, just say, and what I love about the way I've seen you work is you help people through a strategy and you sort of work through with them. If someone's had a few struggles in the past, what would you recommend to someone to try to improve their credit score?
Yeah, the number one thing is only apply for finance when you actually need it, and if you're only willing to go ahead with it. And leverage off the expertise of a broker, right? We understand lending criteria, what lenders' appetites are, so that we're placing you with a lender that we're confident that they're going to accept your application or lend you the money. And we also have the tools and the ability to see what your credit conduct and what your overall profile looks like. So the key tips I'd have there are, obviously only apply if you need it, work with a broker, and just be mindful of, applying online or putting any inquiry online to a bank or a credit provider. You might be unaware that they're actually going to hit your credit file.
Yeah. And I find it personally, it's quite sad when you get the odd client come to you and you just see numerous credit inquiries on there and you just feel like it's just for a lack of education. They just didn't realise, obviously, that each time that they were clicking submit, a credit check was going on their
Yeah,
file.
100%. And a lot of the time it happens when they go to dealerships as well.
Yeah.
You'll sort of find that as a broker, we've got a credit license and we've got memberships and accreditations that allow us to do what we do. Unfortunately, the dealerships don't have the same tools and the same platforms that we do. And they've only got access to a couple of lenders. So when they submit your application, they're not doing a soft credit check. They're not seeing sort of what's happening in the background. And if they get as a client, they're more than likely going to go to the next lender and hope that they get an approval. So you sort of find that, going to a dealership in some cases, they're getting 2 or 3 credit hits without them even knowing.
Yeah, right. And I guess the sort of idea of finance through the car yard, I find it as a consumer, I'd sort of walk into the car yard, and just because of convenience and ease is kind of the reason why I might purchase a car loan from them. You've already mentioned a couple reasons why you could benefit from speaking to a broker. Are there anything else that you want to expand on in that particular point with the differences that you can bring to the table?
Yeah, I think one of the things that we like to do is we like to hold our hand and hold our client's hand through that process. So when it comes to purchasing a car, I always say to my clients, go do your research, fall in love with the car you like, and then come back to us. Let us take that icky feeling of dealing with a salesman at the dealership and having to negotiate a price. we've got access to quite a large fleet company and a number of dealerships across Australia where we have the ability to negotiate potentially a better price for you and have the car actually delivered to your door. So for us, it's all about, customer experience and good customer outcomes, and sort of taking that headache of, having to go into a dealership and go through the whole motions of buying a new car and having to sit with finance and having to sit with aftermarket. We'll take care of that for you.
Yeah, brilliant. So sort of a real start to finish solution there.
Yeah, 100%.
Yeah. Mate, I love the idea of sort of cars, equipment. What's the coolest thing you've ever financed where you're like, oh, geez.
Look, I do love my cars, so there's always been some really nice cars that we have funded. But I think it's the peculiar things, right? Though last year we financed all the encoders and routers for the V8 supercars team.
Right.
So essentially, all that information that they were capturing in those encoders and routers was beamed up to satellites and then sent through the broadcasters. So that was a pretty large transaction for us, which was, I think it was just under 900K that we funded. We've done a couple of multi-million-dollar boats, which has been really cool. But yeah, most of the time it's like big graders, equipment, helping businesses with cash flow and helping and seeing businesses succeed is also really good too.
Yeah, totally. I sort of think to that example of the sort of routers and whatnot, you sort of look at those pieces of equipment and even a boat, for example, and you kind of think, no one's really sinking or buying that with cash, are they? You know what I mean? If you're a business owner, you're doing really well and you could afford a boat, even if you had the cash, you're not going to just drop a few million just into sinking it into this one item, are you? You're going to look at finance options, because really the idea is you could use that money elsewhere and invest it better to get a better return.
Yeah, 100%. And I think on the other side of things, it's also having that money back in your personal pocket to be able to pay down your owner-occupied property, which is non-tax deductible, right? So using your business income and the business profits to purchase assets and essentially funding it allows you to claim depreciation, servicing, maintenance and interest, where your cash gives you the ability to pay down owner-occupied debt, which is non-tax deductible.
Yeah, absolutely. So, mate, just as far as asset finance goes and your sort of forecast for 2025, are there any trends that you're seeing out there?
I think we'll start seeing interest rates sharpen, especially in the asset finance space, and a bit more flexibility from lenders. What we've sort of found over the last couple of years is we've seen lenders tighten up in regard to their lender policy and flexibility and what they're willing to lend and who they're willing to lend to. So I think we'll start seeing a bit more flexibility from lenders and a bit more appetite in the market.
That's really exciting, because as a business owner, easier access to credit at a cheaper cost means the ability to grow your business more.
Yeah, 100%.
Yeah. So James, I know we've covered a lot of finance for business owners, but another one that you've been able to help with in the past for our clients is a car loan for example, like a mum and dad. Can you talk me a bit through that sort of process?
Yeah, look, the process is generally pretty easy. As we touched on before, it's a lot easier than, say, your typical home loan. So for us, we more or less need 5 to 10 minutes to go through the application with the client. That just gives us a general idea of, their needs and objectives, what their overall profile looks like. From there, we'll obtain a couple of pay slips, their driver's license, and within sort of 10 to 15 minutes, we'll come back to them with a bit of strategy around, what lenders they're going to qualify for, what rates and repayments they're going to qualify for. And after a quick discussion to run through the strategy around, what loan term's going to suit and essentially the overall structure that we think is going to suit best, we'll submit it for approval. And generally speaking, within 12 to 24 hours, we'll have that approval back.
Brilliant. Then drive away.
Not that quickly, but close enough. But essentially at the back end, once it is all approved, we'll liaise with the dealership on the client's behalf, essentially prepare all the paperwork, the invoices and the loan contracts and have it all settled for them.
Brilliant. Easy process.
Yeah, quick and easy.